Now, value-added tax is a consumption tax chargeable on value added to a product in the process of production. Like all other indirect taxes, it's a tax that targets the final consumer of goods and services. The purpose of VAT in Nigeria is to increase government, that's federal, state, and local revenue from non-oil sector. And thereby reducing the government's dependence on oil revenue majorly. Nigeria's VAT rate since the introduction of VAT through the VAT decree of number 102 of 1993 has been 5% up until January 2020, when it was increased to 7.5%. The decision of the Federal Executive Council to approve the proposed increase did not come as a surprise, given the several attempts by recent and past administrations to increase the rate of VAT. According to most recent reports by the National Bureau of Statistics, Nigeria generated a sum of 1 trillion naira in the first half of the year in VAT collection, consisting of 512.25 billion naira in the second quarter, 495.39 billion naira generated in the first quarter of 2021. I introduced her earlier. She is a partner, International Tax and Regulatory at Deloitte Nigeria, Aishata Agbolu-Aje. Good afternoon. It's good to see you.
Good afternoon, Tolu.
Yes.
Pleasure to be here.
Yes, so I want to start this way. We've read a lot, and a lot of comments have followed the judgment that happened in Rivers State. But first, take us through VAT in its entirety, what it stands for, and who is to collect what. Please take us through that as a professional in that bit.
Thank you very much. So I like the fact that you are prefacing this before we start talking around the judgment. So VAT, as we know it, you've given an introduction. It's a tax imposed on sale, importation of goods and services into Nigeria, and sale or supply of goods and services in Nigeria. So pretty much that's what it is. So if you're selling any goods or importing any goods in Nigeria, they're supposed to be VAT. And it's across all the value chain. So for service industry, it's the person that enjoys the services that is like the end user, and that cannot be carried forward to another party. For production or resale, that tax that they paid at one level can be moved on. So you collect at the second level and take your own back that you have paid. So that's what we call like the input and output mechanism within the tax. So if a taxpayer has paid VAT, so let's say on importation, you paid VAT at 7.5% on importation, and you use that raw materials to produce goods. When you're selling the goods, you charge 7.5% on the value of the goods that you have produced, but you can claim back what you have paid, and then the remainder goes to the government. Ultimately, is to ensure that it's the end user that finally pays the value-added tax. So it's a federal legislation that has been covered by the National Assembly. It's been on, as you mentioned, since 1993, and it's centrally pooled, and then the revenue is shared across all levels of government. Federal, state, and local governments get their own share of the revenue. So before the recent one, that's like a snapshot of value-added tax. There's been some practical issues with value-added tax, and I think I've mentioned this earlier on this show, around the way our value-added tax is skewed towards like B2B transactions. So for practical realities now, we do not get to realize the VAT that goes on in the informal sector. So let's say manufacturer sells to wholesaler. From the wholesaler selling to retailers and the end users, the VAT at each level of that profit level is being lost because of how we've handled our informal sector to date.
Now, on the 9th of August, there's this judgment in Rivers State. Let's go to that. And for us, we've heard that FRS, the state governments are to collect. And some say it's good news for some states, but it might not be good news for some states. How does this come to you, and what's the impact of all of this? Will it not affect the projections of the FRS or before now?
Okay, so thank you for that. So while as you have read the highlights of the snippets of the case online, that's the way I have read it. I have not seen the copy of the judgment. I think there's a long queue to get a copy of our judgment. But this is not the first time the value-added tax is being attacked. So apparently there was a judgment, I think around 2020, by an individual that took FRS to court, saying the act should be declared a nullity by the Federal High Court. So there's been cases spanning, I think, over 30 years. The Agbera case around whether states should have their own sales tax law vis-a-vis what the federal should be able to legislate upon. So these are some of the things that have tried to be situate where VAT should be. Should it be federal? Should it be state? Across all jurisdictions. So this case it's interesting because I think the focus and like the predecessor of the one that I mentioned in 2020, it's limited, and it's based on what we have read, is limited to one aspect of the exclusive list, which says taxation of income, capital gains and profit, and then there's stamp duties. So those two are the ones that we focused on. But when you look at the constitution is a legislation that should be reviewed holistically. We would say when we look at the legislation constitution holistically, there are other aspects of the constitution that we would say, could give rise or give basis to the value-added tax. So there is an example which was I think item 61 that talks about trade and commerce. The trade and commerce is wide and it includes import. So value-added tax, as we know today, is taxed on import. So import will come under that. There's transaction between states. So when a manufacturer manufactures and you're moving from one state to another, there's transactions between those states. That is something that is one of the examples that we have under that. There's been case law that says those examples could be regarded as limited, but even if they are regarded as limited, these are some of the things that are in the value-added tax are supported by the Constitution. There are other provisions in the Constitution so that seems to give rise or give validity to the value-added tax. So we talk about the interstate, we talked about import, we've talked about the concurrent lists that says that federal government, the National Assembly has powers to impose tax on any person. So these are some of the things that we have seen. And then we've seen that in doing all of this, the legislation of the National Assembly should ensure that not one person is taxed in two states. If we were to say, the value-added tax as we have now is scrapped, assuming which is not something that I subscribe to where I sit. Assuming if it says it should be scrapped, each state would have its own law, and then the question will be, how does these laws in each state, how would it not impact, how would it ensure that individuals are not taxed twice? So if I buy something in Lagos and I'm shipping or I'm moving wholesale to Abuja or Kutangora or wherever, at each level, there's been a sale in Lagos. The Lagos state would say, I'm collecting mine. Then the onward sale in Kotangora would say, I'm collecting mine. And there wouldn't be the input-output mechanism because there's been another entity that has taken it and I wouldn't be able to claim any Ogun State will not give me any credit for tax that Lagos State has collected. So these are some of the issues that would warrant or support again the value-added tax. Again, there are some discussion around what should tax of income and the definition of off, and around what tax on income would be, as it's distinguishing it from tax on income, which is supposedly what I've seen as the basis of the judgment that we have seen. So, and that is one aspect. As I said, there's been a lot of cases on each point of this. So for like the interstates, there's a Supreme Court judgment that says the states cannot make any law that would hinder the ability of commerce within states. The states cannot make any law that would ensure that somebody will pay tax in different jurisdiction. And we have the concept of covering the field, that where there's a legislation that the Federal National Assembly is empowered to make laws on, if it has made that law and has covered the field, state's law should not come to oppose that or do anything that would be against that. That is one of the reasons why the Supreme Court has made a judgment in case between AG Federation and AG Lagos. So we've had this over and over, and we've had Supreme Court cases that are in line with that. ultimately, and this is what it is for, and this judgment, as we say, have different connotations for different people. So as you've mentioned, there's a case, the Federal High Court case that talks about FIRS should not harass people resident in a state, and I'll give you some of the conditions in that case. So who are the persons resident in a state? If you talk about companies are not considered to be resident in a particular state. The concept of business registration of name is based on a federal law, it's on a federal regime. So again, it's a question of, so in that case, who will be the resident? So it will leave us only with the individuals. So when we have the individuals, there's another provision of the Constitution that says the National Assembly has power to impose any tax that's under the concurrent arm, impose any tax on individuals. So these are some of the things. By the time you start digging deep, you would see that some of the arguments will fall through the cracks. Do I say states that have legitimate expectations? Should I say states that have should have a basis? Yes, states, because the whole concept of, again, based on the Constitution, the concept of VAT is based on the end user. And that means the end user staying in my state, the income is largely generated from my state. And the Constitution says there should be some principle of derivation where there's general or pooling of revenue. So in that case, states that have, or that consider that they have a higher basis to collect more on this revenue sharing can then come together. And at the same time, it will be, because it's everybody has to come together, there has to be some synergies between the federal and the state to say, okay, there's a general collection that has been made. How do we ensure that its sharing is equitable? It's coming from my nation. I'm the one that is bearing the brunt of having a lot of people in my state. I'm the one that is having people make more money, making the environment good enough for people to invest and generate money and spend this money. Then I should be able to get the VAT element of that. So I think if this one was the basis of discussion, it will be good. And I understand that the Revenue and Fiscal Mobilization Commission is saying they are looking at changing the modalities of sharing revenues. This is one of the things that we think would be able to come to bear. In this case, if there's synergy between state and federal, the informal sector can be captured, the pool will be wider, there will be more basis of sharing, and then with the digital aspect of tax collection that we have now, it's easier to actually track and say, where is this money coming from, and how do we ensure that basis is covered? So for me, I would say, based on what I have seen and based on what I've read on the internet, not seeing the cases as we speak, and based on the other aspects of the Constitution, I would say there is still justifiable basis for holding on to the VAT, especially as we have a Supreme Court judgment that has maybe not on the same terms as this other case, that has more or less given credence to the Value-Added Tax Act. So again, I wouldn't say taxpayers should say, oh, because VAT Act is a nullity, I wouldn't pay. That would be very well, it's taking a very, very high risk. And again, because as I mentioned, even if we were saying it's a nullity, it's to the extent of its inconsistency. And if the federal government, the exclusive legislative list, has issues around interstate travel, determining which aspects or commodities are essential, importation, and issues surrounding any of these aspects, I would say it will be very risky for anybody to disregard VAT, so to speak.
All right, I wanted to follow up on the sharing formula, because what I saw currently with Section 40 is about states getting 50%, federal government 15%, local governments 35%. That's on one side. I like your comment on those figures. And do you think that all of this will not cause any form of complications for businesses, SMEs, and all of that, to have to deal with multiple tax authorities with all of these developments?
Okay, so if based on this, okay, so let me take the sharing. So the sharing, and because of the modalities of this operation, there is the federal system that we have. on how the actual number of the sharing, I may not be able to compute on the correctness or accuracy or rightness or wrongness of that. So the federal government is taking a part of that. So, and they'll say, oh, because the federal government has explicit powers on import and some other activities, they may say, oh, and they are spending some general amount at the federal level. That is one. For the states, I think the major consideration would be sharing amongst the states and which state should get what. There's been some states that are feeling well, they have the opinion, and I think I read on the internet that the governor of Ogun State was clamoring for a more effective or a fairer basis of sharing. There's been, and I think that's one of the reasons that pushed the Rivers State AG to go to court on this. So each of the states have their own basis, especially the states that believe they have high revenue generating power, to say, oh, I want more in my state. Let it be fair because it's derivation. The constitution says you should follow derivation. I will do that. So that is on one hand. Then there are the other states, and then it's again as an impetus for the other states. So if I'm in a state that I don't generate my people, I don't make the environment friendly for people to have revenue and spend money, and because there's just this windfall coming, I'm not pushed to ensure that my revenue or my area I make it investment friendly. So these are some of the things that have been in play. So on this one, there can be more discussions with the RAMFAC around this. And then for local governments, because people are living in local governments to have obligations to people. So it's around this one that we can then have that arrangement and that discussion to ensure that, okay, we can deep dive and say, where are these actually taking place and who should get what in that regard. So there can be that sharing. The second aspect that you mentioned is around, would SMEs and players not bear additional brunt if this was to work? If it's a central pool and is being shared, I think it to a large extent minimizes those incidences of double or additional obligations on MSMEs. And you will note that in the recent, I think 2020 change, there's a limit to say if you're an MSME, you do not, your turnover will be a threshold for you to know that if you want to, would be a threshold for you to fall within the category of people that should do with the normal compliance, not exposure or payment of VAT now, but at least the compliance that comes with that obligation. So that is one thing that they've tried to do to help MSMEs. But if we were to say the central pooling would be gone and it would be based on each state, then MSMEs will not have cause to worry. And ultimately, it will just be that, okay, you should only do business in your jurisdiction and not even think of going online, because so long as you are online or doing any social media platform, then you are to the world, and you cannot say you are only within a particular state. Okay. So you cannot you can only sell with people in your community. You cannot bring from another state to your state. So the question is, how many states do we have all these manufacturing organizations in Nigeria? Nigeria, we always say we are important.
All right.
Okay.
Yeah, that's the reason.
Can you hear me?
Yes, I hear you clearly. You made made us understand this so very well. I think this discussion, we need to have another phase of it because it's really interesting and well detailed. There's more time. This is what we can accommodate today on the show. I must thank you so much, Partner International Tax and Regulatory, Deloitte Nigeria, Mrs. Aishata Agboluaje, for spending your afternoon with us. Really appreciate this. Thank you so much.
Thank you very much, Dulu. Pleasure to be here.
Then.